Hey, welcome back. If you are new here, hit that subscribe button right now because this video is going to be one of the most useful things you watch if you are serious about trading crypto. Here is the problem with most crypto content out there. It is either so basic that it tells you nothing useful, or it is so advanced that beginners have no idea what is happening. This video is different. I built this as a true masterclass. That means we start from the ground floor and we build all the way up. Whether you have never bought a single coin in your life or you have been trading for a year and still losing more than you win, this video meets you where you are and takes you further. By the end of this, you will understand how the crypto market actually works. You will know which trading style fits your real life. You will be able to read a price chart with confidence. You will have a complete risk management system that protects your money. And you will have a clear step-by-step roadmap from wherever you are right now to becoming a consistently profitable trader. This is the video I wish existed when I started. Let us get into it. How the crypto market actually works. Before you place a single trade, you need to understand the environment you are operating in. Most beginners skip this completely and it costs them real money. The crypto market is a global market that runs 24 hours a day, 7 days a week, every single day of the year. There is no closing bell, no lunch break, no holidays. It never stops moving. This is very different from stock markets, which have set hours. Crypto can move 5% at 3 in the morning on a Sunday. It can move on a single tweet. It can reverse in minutes. The market does not care about your schedule or your feelings. Now, here is something critical that most beginners never learn. The crypto market moves in cycles. There is a bull market where prices are rising, news is exciting, and it feels like everything is going up. This is when most new traders enter the market. Then there is a bear market where prices are falling, sentiment is negative, and recovery feels impossible. This is when most beginners panic and sell at a loss. Here is the painful truth. The best buying opportunities almost always happen during the bear market, when most people are too scared to buy. The most dangerous time to buy is at the peak of the bull market, when everyone is excited and prices are already stretched. And one more thing, Bitcoin leads everything. When Bitcoin moves up strongly, most other coins follow. When Bitcoin drops hard, almost everything drops with it. Always know what Bitcoin is doing. It sets the tone for the entire market. Find the trading style that fits your life. One of the biggest mistakes beginners make is copying strategies from people whose life is completely different from theirs. A professional trader who watches charts all day uses completely different methods than someone with a full-time job who checks the market in the evenings. And that is perfectly fine. There is a style for every type of person. Let me walk you through the four main trading styles quickly. Scalping. You make many small trades throughout the day, sometimes dozens, capturing tiny price moves. This requires extreme focus, fast tools, and deep experience. Not for beginners, not for people with other jobs. Day trading. You open and close all trades within the same day. You need several dedicated hours each day. Requires significant experience. More accessible than scalping, but still demanding. Swing trading. You hold trades for days to weeks. You check charts once or twice a day. You do not need to watch every minute. This is the most practical style for most real people with real lives. This is where I recommend most beginners eventually land. Position trading. You hold assets for months or even years. You are not focused on short-term moves. You are focused on long-term value. This is where the majority of your portfolio should live, especially early on. My recommendation is this. Start with long-term positions in Bitcoin and Ethereum while you are learning. Practice swing trading with a small portion of your capital as your skills develop. Build from there. Risk management, the system that keeps you in the game. This is the part of the video that will save you the most money. Please pay close attention. Most beginners focus entirely on finding good trades. Professional traders focus equally on protecting themselves when trades go wrong, because trades will go wrong for everyone, always. Here are the three rules that form your complete risk management system. Rule number one: never risk more than 2% of your total account on a single trade. If you have $1,000, your maximum loss on any trade is $20. This means even if you have 10 losing trades in a row, you still have over 80% of your account. You are still in the game. You can still recover. Rule number two: always set a stop loss before you enter. A stop loss is an automatic exit order. It closes your trade at a predetermined price if it moves against you. Set it before you click buy, not after, before. This removes emotion from the exit completely. Without a stop loss, you will watch a small loss grow into a catastrophic one because you keep telling yourself it will come back. Sometimes it does not come back. Rule number three: always know your risk to reward before entering. For every trade, you should be targeting at least $2 of profit for every $1 you are risking, ideally 3 to 1. Here is why this matters. If you target $3 for every $1 you risk, you can lose more trades than you win and still be profitable. 6 losses at $1 equals $6 lost. 4 wins at $3 equals $12 gained. 40% win rate, still profitable. That is the math that keeps professional traders in business. You lose a trade, you are frustrated. You immediately jump into another trade trying to make the money back fast. That trade is based on emotion, not analysis. It usually loses too. And now 2 losses become 4. The cure: after any losing trade, close your charts. Take at least 30 minutes away. Come back with a clear head. Never trade angry. Trap number 3: overconfidence after winning. You win 5 trades in a row, you feel unstoppable. You start taking bigger positions and skipping your rules. Then, one loss wipes out all 5 wins. The cure: focus on executing your system correctly, not on results. A good trade is one where you followed your rules, regardless of the outcome. Trap number 4: moving your stop loss. Your trade goes against you. Instead of accepting the small loss, you move the stop lower, then lower again. A small loss becomes a devastating one. The cure: set your stop before you enter. Honor it every single time, no exceptions. Your roadmap from beginner to advanced. Let me give you a clear roadmap so you always know what to focus on. If you're a beginner, your focus for the first 3 months is education and observation. Do not trade large amounts yet. Learn to read charts. Understand support and resistance. Follow Bitcoin closely. Study the projects you are interested in. Start a trading journal and record everything you observe. If you are early intermediate, meaning you understand the basics but you are still inconsistent, your focus is building and testing one single system. Pick one setup. Trade only that setup for 90 days. Track every result. Stay disciplined with risk management even when it feels unnecessary. If you are intermediate with some consistency, your focus is refinement and psychology. Study your trading journal deeply. Do more of what works. Eliminate what does not. Work on the psychological traps we just covered. Start learning advanced concepts like market structure and Confluence. If you're advanced, your focus is scaling and protecting. Increase position sizes gradually. Diversify strategies. Protect your gains as your account grows. The most important thing I can tell you about this path is this: give yourself at least 1 to 2 years before expecting consistent profitability. The traders who make it are the ones who treat this as a skill to develop over time, not a shortcut to fast money. Let me wrap this up. The crypto market is volatile, global, and never stops. Understanding cycles and Bitcoin's role is your foundation. Match your trading style to your real life. Swing trading works for most people. Technical analysis gives you a framework. Support, resistance, moving averages, RSI, and volume are your core tools. Risk management keeps you alive. 2% rule, stop losses always, and positive risk to reward on every trade. Psychology is where most traders lose. Avoid FOMO, revenge trading, overconfidence, and moving stop losses. And your roadmap is clear: education first, system building second, refinement and scaling third. If this masterclass gave you real value, hit the like button and subscribe. This content takes serious work to put together, and your support means everything. Drop a comment below. Tell me where you are on the journey: beginner, intermediate, or advanced. I read every comment and I will give you a personal recommendation. I will see you in the next one.